Well, WTI futures today finding some support, trading at levels that we haven't seen since May 5th. A lot of this is due to news flow that hit the wires earlier this morning, starting with IEA talking about the bloated world inventories due to the pandemic and how that has returned to normal, or inventories have returned to normal. That was quickly followed by the European Commission raising their 2021 GDP forecast by a half a percentage point, followed by some carryover support from OPEC, who raised their global demand estimates by about 230,000 barrels a day. All that to say, gains seemed somewhat limited, almost tentative as it were, partially because the IEA report came out mixed. On the good side, positive side, distillate supply fell to 13-month low. Supplies at Cushing fell as well. But on the negative side, inventories drew 1.5 million barrels less than expected, and production rose ever so slightly more than expected. Gains also limited because we continue to see a surge in the US dollar, and the S&P 500 today fell to 1-month lows, at least intraday. All that to say, looking at CME Group CVOL, interesting story when you look at the whole curve in June. On a 1-week and 1-month basis, volatility is trading in about the 80th percentile. But compared to 3 months, it's actually only trading in 30th percentile. So take that into consideration. Up variance, down variance. Interesting story there is that up variance is down pretty big. Down variance unchanged, so that would imply that skew is down and down fairly sizable for the period. At the money vol is moderately higher. When it comes to options volume, at least looking at June, seems like a lot of volume is clustered around the 65.5 and 66 strikes. Also seeing noticeable volume in the 65 put and the 68 call.